All right, so a lot happening today on the global outlook and what that may do to crypto markets and also traditional markets. We'll try to break down some of that today without going too deep into this bad news. But of course, I think it is going to impact. So you guys are going to stick around for this one. My name is Paul Brown. Welcome back into Tech Path. All right, let's cover a couple of things here. And we'll be going into charts and take a look at some things in terms of how this situation in Israel and Palestine and how this may play into the crypto markets. Before we get started, I want to thank our sponsor, and that's iTrust Capital. If you're looking at going in long term, one of the ways you can do that is through a crypto IRA. Very easy to sign up and also very simple to use. There's no monthly fees. All you do is pay a fee when you do your trades inside your own IRA. So make sure and use our link down below and you'll get a $100 funding reward. Pretty simple, pretty easy, and it does help the channel out. So go check it out. Use that link down below. All right, a couple of things I want to hit to. A couple of posts here from Twitter. This, of course, is Kyle Chase coming in, talking about a few things that I think will start to affect what we're going to see. In the world of global finance, few commodities capture the imagination quite like crude. Obviously, we know the geopolitical ripples cascade around all this, and the Middle East, of course, is right now in the center of what's happening. So these events this weekend kind of served as a reminder of global chessboard of resources. Energy, especially crude, reigns supreme. And I think this is one of the things that we continue to point at is that when you look at some of the influences on what causes not only inflation, but the most pain on American people is the price of energy. And that, of course, is what he's playing into. The U.S. recently announced it has 17 days left of oil reserve. Slight tremor in its geopolitical landscape can send aftershocks rippling through global economies, affecting industries, consumers, and nations. Now, all this plays into what could be a very negative position overall. Now, does that mean it's bad for traditional markets and maybe good for what's happening in the, risk markets, much like Bitcoin and crypto in general? I think this is going to play out very interestingly over the next few months, especially whether or not we'll see more activity around what's happening in Israel. Further into this, U.S. Treasury Secretary Yellen, U.S. likely to take steps to enforce $60 a barrel oil. This is coming from the Wall Street Journal. This is important because if Secretary Yellen is going to this extent, this means they are very worried about energy and what this might look like, especially when you look at the fact that we've depleted all of the U.S. reserves and what this might look like in the short term. Remember, energy coming in, this plays very badly for the Biden administration, obviously going into next year's election, and not being able to recover. This also potentially puts a longer stint on whether or not we come out of this. Remember, global impact, especially in the United States, when it comes around energy, and the only place that you can really kind of center that focus is coming from the Middle East. And obviously now you have a destabilized Middle East right now. Kobe EC letter coming in and says, hey, key events this week. You've got PPI inflation coming in, Fed minute, September CPI, which is going to be important. Watch that one. OPEC monthly report. That's another one. Let me zoom in on that for you guys. OPEC monthly report Thursday, jobless claims Thursday, and then 12 Fed speaker events coming from all the 12 Feds. So all of this could be into a position where we start to see things starting to switch up a little bit in the term of, do we see printing? And I'll talk about that further as we go into the episode today. This was a Squawk Box interview of some of the global analysts around the financial markets from a global perspective. Listen in to what they had to say. Let me play this clip for you.
Cambridge. And Mohammed, last week after the jobs report, you said that a soft landing was much less likely, that there's a risk of something breaking. How do you now assess everything with this added on top of it?
So, Becky, given what's happened over the weekend, and my thoughts and prayers are with the families and friends of those who lost loved ones and all the other innocent people who are either missing or have been taken hostage. Look, this makes the U.S. outlook even more difficult. I think the key question, and you've got some really good guests coming up, is this conflict contained, or does it bring in other parties? So far, the markets are trading as if it's contained. But if this expands and brings in other parties, then the outlook is for even a weaker global economy, even more inflationary pressures, and the markets are going to be finding it hard to deal with that.
Look, there's...
All right, so I'm going to pause it there, but he did hit on the key point right there, and that is if this is contained, market is responding as if it is contained. If we do see a little bit of that, exposure that starts to move into other countries within the Middle East, that does cause some major issues around, as I said, oil, which is really the common currency around the globe, especially here in the United States. And it has so much bearing on where and what we're going to be dealing with as a country in terms of inflation, being able to recover, get into business as usual, which is a growth market, which is a problem right there. This was a post coming in also talking about getting quite a few questions on this. All I do know is that the Ukraine war triggered 8% down candle. That was erased within a day. A couple other things that were happening there, if you think about how the Ukraine war had some effect on cryptocurrency, is there was actually a little bit of activity that occurred mainly because Bitcoin and other crypto was being utilized in these areas that we saw these conflicts occur. So some of that's going to probably play into it in a slight way. I think the bigger and more macro picture that plays into what's happening right now in the Middle East is the issue of energy, more so than any. Financial giant, of course, Bank of America now warning about U.S. bonds. Markets may be moved because the bonds, of course, accelerating. All that playing into the pressure on the traditional markets. If we continue to see bonds rise, then the traditional markets are going to see that pressure. This is something that we've seen and a lot of analysts have already pointed to. And this is kind of the situation that we're facing right now. This is just a chart right here. 2-year U.S. Treasury yields closed at over 5%. Levels not seen since 2007. That's a pretty crazy chart right there. Yields are up short, whether short or long, accelerating higher is likely to result in continued pressures on equities. This gets into the traditional stock market, which is where we start to see that adjustment. Now, we haven't seen the full adjustment on that because we've still seen a little bit of uptrend here recently, but only in the last few days on some of these markets overall. Here was Jordy Alexander, who we've had on the show before, and he mentions a couple things here. I haven't expressed macro views in a while. Things are about to start really moving. It's time. I spent months analyzing the end game of U.S. policy. Outcome, I said, is coming into view gradually first and then all at once. Fed will now have to kind of poop in their pampers to deal with this. And what he simply is saying is that we're going to be dealing with some scenarios that are going to play out around printing. This is a bat signal I've been waiting for. What it does mean is why the Dallas Fed president in the top tweet doing a big U-turn. And that's because they're starting to realize that they're losing control of the bond market. The bond market continues to grow because of the global pressure of what we're dealing with macro. And that's going to continue to put pressures on the securities market, which then in turn starts to get these Fed guys a little bit uneasy. And at that point, you could be looking at a print. Once we start seeing a print and a pivot in the market, that's when you start to see the impact on the risk markets, such as crypto. So all that plays into it. Bitcoin, of course, right now, if you compare Bitcoin bull market forecast, short-term dips before positive growth. Many people have been saying this for a little bit, that we could still see some more pain with Bitcoin. I think with the short-term scenario, again, all this going to be triggered off oil. This will cause a little bit of pain in the markets in general. But the question will be, is how do these risk markets start to accommodate for what's happening in the securities market if we truly do see a big downtrend? Now, we're going to be doing a video on Ethereum later this week, and we're going to be kind of breaking down some new movement within ETH on to lighter note here. So make sure and check that out. This is an article we'll kind of cover a little bit about what would happen if Michael Saylor would be up to $2.5 billion if he had chosen Ethereum over Bitcoin. So just saying, you kind of play those things overall. And don't forget, you got Van Eck also kind of jumping into the fray. We're going to have the Van Eck guys on this week talking about the ETH futures. And the likelihood is we're going to see a release here coming up on this next release of data. Van Eck could be in the $10 million range, which would be massive for an ETH futures, especially with something like this at this given time. So we're going to be covering all that good stuff, give you guys a full rundown on that. If you're not following us on the Diamond Circle, make sure and get in there now. It's a great place to catch additional content. If you guys want to catch me out there on X, it's at Paul Barron. We'll catch you next time right here on TechBat.